Hello, everyone, and thank you so much for joining the monthly 2-minute summary of what has been going on in the markets and the economy. I'm Amy Irvine, the CEO and founder of Rooted Planning Group. This year's been rough, there's no doubt about it. So far, year to date, we are currently down about 20.9%. At the lowest point, we are down about 25%. As you can see over time, although despite the bear market this year, the stock market has rallied significantly over the past 2 years. And if you go back looking even further, you can see it's rallied pretty significantly since things like Brexit, COVID-19, and the trade wars. Yes, it's important to understand that even on uncertain times and due to inflation and the Fed and tech stock corrections, still in the long term, it's important to maintain proper perspective and look at and not just look at the short-term volatility. If you'd like to know more information about this, I only have 2 minutes, so I'm not going to spend a lot of time about it. Hop on over to our 10-minute view of this. But one of the things that you'll notice here is these are the bars for the returns that have happened for the year if you got into the money January 1st and stayed until December 31st. These red dots represent the significant intra-year drop for most years, meaning, and I shouldn't say significant in all years, but on average, there is a significant intra-year drop. Even though most of the years still end positively, throughout the course of the year, there typically is some sort of decline in the S&P 500 that we experience. And things, when they're down, may turn around at any given point. We just never know when. I spend some time on this particular slide in the 10-minute video, but understand that the average correction is about 14.3% and takes about 5 months. And the typical recovery is about 4 months. That's not to say that it goes down for 5 months and back up for 4 months. There is some volatility in the middle, but these are the typical numbers and averages. So when people say, is there going to be a correction in my lifetime? We often refer them to this slide. And when it comes to the economy, right now we've heard all about the interest rates, and we often look at what's called an inverted yield curve. The 2-year Treasury is actually a better return than the 10-year Treasury. Typically, that is not true. As you can see, often the 10-year Treasury has a much higher return than the 2-year. And during periods of inverted yield curves, people often say that's a sign of a recession. Well, certainly this year is one of those years. That's why we're keeping things very, very short in duration. And if anything will indicate the fact that we probably are headed into a very slow cycle or a recession, check out the latest personal savings rate. We have actually dipped below the historical average and even looking like it's on par for years like 2005. So looking at that particular rate of 3.1%, this means that the household savings are slipping. People are still spending right now, but it is a consequence of their savings account. And then also we are definitely seeing some economic activity indices declining. Notice how both the non-manufacturing and the manufacturing have fallen in 2020. So I think we're on the verge of a slowdown, which might mean that the Feds will continue to raise interest rates, but potentially at a slower pace. And finally, for the 4-minute version of the 2-minute slide, notice here on this slide how the balanced fund is sort of in the middle of asset class performance. I always say that good asset diversification always says I have to apologize for something. In this particular case, notice how I'm either apologizing that one or more asset classes perform better, but also one or more asset classes perform worse. In 2022, the average balanced portfolio is coming in a decline of 16.9%, with fixed income just slightly above that, and commodities the only sector that's actually a positive return. This is why we have to stay diversified though, because we just never know which particular category is going to outperform another category. Thank you everyone for joining me. We hope you've enjoyed this. We know we went a little over, but in times like this, we want to make sure we're well educating.